In my honest opinion, DBGI is looking a little nervous. It's looking a little shaky. We did fail this descending broadening wedge, which is usually a trend reversal signal on its own. So let's go ahead and find out exactly what's going to happen with DBGI. We can gain those potentials within this video. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a DBGI technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community called ARCa in Discord. Okay, with that said, let's go ahead and dive right into the charts. Okay, so DBGI is definitely failed our descending broadening wedge, and this broadening wedge was the hope that I was looking for, the hopium that I was looking for the bulls. And it's actually following very much with the criteria. So you can see that the EMA 7 right over here has been used as a form of resistance before a continuation onto the downside, which something that I'd like to see, to be honest, we're on the daily chart here. I do like to see inverted hammers printed like this at the bottom of a downtrend. And this usually presents a potential upside move. Now, this is candle analysis and is very much raw price action analysis. You can also see that we're starting to get a lower tick on sell volume, which could be presenting the possibility that the bears are losing strength, or the interest for the bears is starting to diminish a bit. Now, the invalidation of this play was very much in accordance with the invalidation of many other plays due to the missile that happened between Russia and Ukraine. I think it launched from Poland or something. But yeah, that created a lot of FUD in the markets and invalidated a lot of things. Okay, so this is the reason why I'm saying that it's looking a bit nervous. Another thing, you guys, is that you do need to keep in mind that when we're faced with all-time or 52-week lows, and then we're in price discovery going towards the downside, that leaves a very limited ability to traders like me, systematic traders. So this is essentially when you start applying a psychological component to the price action and to the downside, in which there's nothing for me to grasp on other than potentially using like an inverse fib in this manner right here to see what potential targets to the downside we can see. Right, so this is a way for us to be able to see a downside target, but I cannot guarantee that since we don't have any previous price action back here to tell us that we can potentially land here, or there. So you have to know that this is definitely very limiting for me. So let's go ahead and move on to the next chart and see what we have. Okay, so this is, I know it's a little hard to see here because there are a lot of lines. So let me just go ahead and remove the moving averages from the play here. So I did notice, and to be fair, this was actually in a smaller time frame. So I did notice that we were in a right-angled descending broadening wedge, and this is usually a bearish signal. So I was able to take, from the 4-hour, I was able to take a point of breakout, and I used an implied projection using a trend line from the point of the highest area of this wedge to the area to where we would break out, which would be this candle right over here. And it did suggest a bottom target of $3.63, in which we did overshoot to $3.42. So the geometrical aspect of DBGI is in play, which at least could be worked with. Okay, so this was how we were able to see this bottom target. And we are now right over here at about $3.85. We do have the $4.02 as a form of resistance right above us. Now let's put in, let's see, some EMAs. So the exponential moving averages are used because they follow price action a little closer than the simple moving averages. So the 7-day period is very much in accordance with the NOT 236 at 402, and this is 415. So we can now draw a box for range. So we can actually take it like this from the NOT 236 to the top of the EMA 7, that yellow line to the left, and we now have a resistance range that we can see potential price movement to. We absolutely need more volume. There is a terrible downtick in volume right over here. So in order for us to make an upside move for DBGI, fear and FUD need to exit. The psychological component needs to be removed in order for us to continue on to the upside. I can see that this is entirely nervous. Okay, so now let's move on to the next chart. This is going to be the RSI, and we are going to gauge a potential direction or a bias in direction for the short term. This is a drawing that I've made for, or a chart that I've made for you guys to be able to follow. I don't want to explain exactly what my RSI properties are. So, you know, this top green zone is this top green zone right over here, and the red zone is the bottom half right down here, okay? Follow along. So we're going to dive right into the 30-minute immediate short-term time frame. We can see that there is literally no bias in direction. We are facing straight across with both the moving average and the RSI signal. No edge in that. Okay, so let's look at the bi-hourly now. So bi-hourly is suggesting a continuation onto the downside. We are well within the bear strength percentile, and we are also beneath the moving average. So this is definitely bearish, and it's suggesting some downside for at least the early session come Monday. Okay, now the 6-hour time frame is suggesting a slight downside as well, and also well within the bear strength percentile. Let's go ahead and look at the daily. The daily is starting to minimize its pivot. So let's look at the buy daily before I make that call. Okay, so the buy daily now is also not giving us a bias in direction. It is correcting, however. So please know that I'm not a financial advisor. I can't actually suggest for you to buy or sell any assets. Please take whatever I do show within these videos as a form of entertainment. I need you to do your own DD and we'll be okay. Okay, so now what I can say is that we can see, let's refer back to these charts right over here. We can see a potential downside move to test once again the $3.63 zone, or actually, no, sorry. It's going to be this candle right over here, this one. So it would be around $3.51 potential bottom. And we have a range to this low of this candle here, which could be 342. So 342, 351 support range before a bounce and continuing on to the upside. Actually, this is something that Wyckoff theory may call or may refer to as a terminal shakeout, or a spring of sorts. We can actually use that before a continuation on to the upside. But again, I am very limited within the information provided for DBGI. We don't have enough data down below these levels for us to be able to grab onto anything. In other words, if we do fail this $3.43 or $3.42 zone with a minimum 4-hour candle below it, we can actually see a free fall to who knows where. Okay, so I mean, we can speculate. We can take a Fibonacci retracement from the low to our current position, which is right about here, and we can see that the 1.618 is landing at $3.15. That is very much an area of interest, and also the 2.618 at $2.70. So these can likely be areas of support as well. Okay, so I just want to be able to forewarn you guys before we continue on that path. So I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, I'll make sure to leave the links in the description below for you to join me on Discord, on Twitter, to ask me those questions, okay? But with that said, I wish you well. I wish you a great rest of your weekend, and I will catch you on Monday at the bell. Adios.